following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do with the German DAX. This takes us over the last, several weeks, as you can see, this hourly chart. If you look at it real closely, over the last 3 days, starting with Friday, we've completed a little three-drive pattern up here. Very, very short-term pattern, of course, and the market's had very little of a correction ever since we broke out of the upside channel that we were talking about at the 10,900, I believe, and we went up to high has been so far has been 12,280, I believe, and we're trading below that old breakout level at 12,245 was that old level. So that's pretty much where we are right now. So we'll keep an eye on that. The main thing I wanted to focus on, we got the Federal Reserve coming in here tomorrow. Today's the full moon, of course. So that'll add a lot of craziness to the market, along with the Fed in here. It's almost 100% guaranteed that they're going to raise. If they don't raise rates with the stock market up 8% in the Dow in a matter of a month, then there is going to be some there's something really wrong out there. Well, who knows? Anyway, we'll look at these things. Let's just take a quick look here at the silver market. One of the things that we were looking at in the silver market, if you remember, yesterday we were talking about the relationship between the silver and gold. And let me just get this chart up here before I forget and not put it in the room. Hold on here a second. You'll see here that we were looking for the ABCD correction in the silver to come in around 1680. And all this time, gold is making new lows, folks. This is a very unusual event to see this happening. That's why I believe we're getting ready for a really big rally in gold because of the patterns that we're seeing. Now, if we take a look at what happened with this, let's just give me 1 second here to get the right chart up. Here's what happened to the silver after we hit that 1680, with the low being 1678. We finished that ABCD pattern. Then we quickly rallied just a little over 60 cents an ounce, which is a considerable amount. That's equivalent to $30 in gold. Gold didn't do anything like that. All gold did was able to rally was to the retracement level of the 61% retracement, and so it was only up about $14 from the low. So we'll see what's happening. The full moon comes in tonight, and remember, it has usually a 1 day orb on either side, so that's between the 12th and the 14th, and the 14th is going to be just flat out crazy. That's at 2 o'clock in the afternoon. Thank you, Mr. Z, for posting that to us. The FOMC makes their announcement at 2 o'clock tomorrow, and that's Eastern time, and that'll be an interesting thing to really watch. Now, the next chart we talked about yesterday, and it's still very important because of the action that we're seeing today in some of these things. This is the gold market, and it's versus the dollar index. Folks, if you want to see a market that has a correlation that is nearly unbelievable, is if you're watching intraday charts, just put your gold chart next to the euro chart and switch them back and forth, because you won't be able to tell which is which. I mean, every time the euro upticks, gold upticks. When the euro downticks, gold downticks. So it's a very, very high correlation in that euro versus the cash gold market, or the futures market. But anyway, as you can see from this chart here, there is a very, very high correlation on a daily basis on the dollar index for that level. So we'll watch this, very, very closely. At the break, we're going to have Byron Tucker, my closest and dearest friend over the last 35 years. He helped Leo Melamed set up the currency operations at the Merck and also the S&P 500. He was running Goldman Sachs's desk when I met him, and he's in New York, and he attends all these meetings. And he just attended last week a really big meeting on ETFs for only the private people in the business. So he's going to share some of that information with us at the break. And if you have any questions on these ETFs, be sure to call in and ask, because he knows the business pretty well and tell you the difference between these markets that we're looking at as far as size and things like that. All right, we want to switch over to the euro one more time, because we are at this real critical level, and with the Fed coming in tomorrow, anything could happen. But if we'll take a look here at this long-term chart, you'll notice we have those three bottoms. They're equal bottoms, and we have not taken out that low of 105. This is the chart that I posted yesterday, which was posted on Saturday morning when I start writing the newsletter. We got down to 105.26, and then we completely reversed and rallied 130 pips straight up. And then last night we had a little bit of a sell-off of about 35 pips. And that's about all it was. And, that's when gold made its 61% retracement. And so gold is set up for a potential rally. But again, with the FOMC is so wild, as you know, and this one is, this pretty much predicted, but we always see some of those, really wild swings. And I'm working on one on Treasury bonds for tomorrow that looks really interesting, because the whole world, they're expecting rates to raise. And here we have, the last 2 days, we've had a really strong rally of 2 points, in the 30-year bond already. So the market has already discounted that to a great degree. Okay, I wanted to talk a little bit. I've had several requests to talk about crude oil. Here's what I wanted to bring up to you. As of Sunday night, we had this big gap up. In crude oil, you see that it gapped up almost, about $1.40 a barrel. We gapped above the highs of December the 5th, and you see we went up, and we went all the way up to 54.50 per ounce. And then you notice that the market came down and it stopped at the 61% retracement. Now, if this market was really super bullish, what would have happened is this market would have continued to go up and take out the 54.50 level. However, we did not do that in crude oil. Here's what happened, and I haven't updated this as of this morning, because I'm going to try to walk through a process with you to show you what I'm looking at here. But as you see here, after the market went up to that 54.50, you notice how it came down to the old highs one more time. You'll see the line there where it made the 61% retracement off of the opening. Once we went below that, that was telling you that we were probably going down into this area. Now, folks, if we start trading below $52, this is going to have all the earmarks of a false breakout in crude oil. In other words, this is not really a valid breakout taking us to $64 a barrel, which would be the longer-term ABCD pattern in this. This will just be a false breakout. We will know today. Now, what we've been able to do last night, we did rally back to that 61% retracement again, up there at that 53.20 level, but we really need to get this market back above 54 to maintain its bullish enthusiasm, because this could have just been a false breakout Sunday night. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted the updated chart for the crude oil, and as you can see, we did go down into that old high area at the $52 per barrel level. Then we rallied about $1.50 up into 53.50. As you can see here, it's basically making a 61% retracement off the high we made Sunday night at the 54.50 level. Oh, we've got a caller from, it's our friend from the wonderful country, the city of the lions, Singapore. William, are you there?
Yes, I'm here, Mr. Pesavento. Thanks for taking my call.
Not a problem, William. What can I help you with?
Okay, in fact, you are talking at the stock that at the commodity that I was talking about is there's a crude oil, and I heard you mention just now that in order for crude oil to be bullish, you have to stay above 52, right?
Yes, that's my opinion, of course.
Okay, because I wasn't sure just now whether we are running the risk, of ABCD pattern down to $50 based on the low. We are quite close to about 52. I'm not sure whether we are at that risk of going down before going up.
We certainly could make an ABCD. That's why I'm a little nervous here. We went down. And if the market was really good, William, I wouldn't have thought it would go back into the 52 level. And now that it hit it once, that's telling us that it's a very strong support. Now, if that breaks, then you'll have that ABCD structure that'll take it. I believe the number is right about $49.90 to $50 a barrel. So this could be a false breakout. We see these, all the time. But look, Sunday night in the first 2 hours, it looked like it was going to go to 60 without even stopping. And then, what's happened now is we've started to see selling come in. So we have to be really careful at this level.
Okay. So in other words, we need to watch the level not to let crude move down below 52. Otherwise, it will negate the what I call the bullish up move, right?
If we get to 52 again, you're going to see a $2 breakdown to 50 because that will be an ABCD pattern to the downside, and that's what it looks like to me.
Okay. If we would really get down to that place, if we really get down to that place, to 49.50, at that level, do you think that we still have a chance to reverse up to above 54?
Absolutely. Anytime you have an ABCD pattern like that, you have a chance. There's one other
Okay.
thing that's really interesting here, William. The correlation between the Canadian dollar and the currency, versus the crude oil with the Canadian is incredibly active. And if we take a look here at this Canadian dollar chart, going back over the last few days, going over the last 6 or 7 months, you'll notice that we're in this really strong level that came in at 31.25. And even though we've gone below it a little bit, considering that we had a 5% move in crude oil in one day, my question is, why didn't the Canadian dollar just, really start to drop? And it never really did that. So that's another sign of a potential, false breakout here in crude. That's, really what I'm looking at.
Okay. All right. Thank you very much, Mr. Pesavento.
Thank you for calling in, William. How's your weather over there? Is it clearing up now with the holidays coming?
It's not bad. It's pretty cool right now, and there's more raining during this period, and we are quite fortunate during this period. Not like last year that we have a lot of haze going on. I would say pretty nice right now.
Well, listen, I want to wish you a happy holidays, my friend, and all the best to you and your family.
Yeah, thank you. You too have a blessed Christmas too.
Okay, thank you.
Bye. Thank you. Bye.
Okay, you bet. That was William in Singapore. And since we're talking about Asia, we might as well stay across the pond here, because I was listening to Tom O'Brien yesterday talk about the Hang Seng. And Mr. Z's asking the question, does he trade the Chinese stock indices? He does some, but most of his work is in gold and crude oil. That's where he makes his money, and he spends probably 90% of the time doing that. But he does have a few, Chinese stock indices. Now, some of those stock indices over there, they like Hong Kong takes a break for an hour, I think, twice a day. I mean, it's ridiculous. They leave these huge gaps in the market, which doesn't make any sense to me, but that's neither here nor there. Since we're talking about the Hong Kong, let's just take a look at this. As you'll see, since September, we've been in a really strong downtrend. We made that 61% retracement. Here we broke above it just 2 days ago, and here again you'll see a perfect example of a false breakout. That did that on the opening and then immediately reversed. And now the market is trading below 2,200. It's had 2 really bad days in a row. And so this market it looks like it wants to go down to 2,100 and change because we're below that old low at 22.22. Oh, that happens to be the Gartley number. But anyway, we did take out last week's low, in just 2 days. So that's a very, very bearish pattern in the Hang Seng, which is also, if we look at China, who's had another, that was down 2% today. We'll take a look at the ETF, and we'll talk to Byron Tucker about these ETFs, because I frankly don't trust them. And after talking to him for quite some time, you surely get the impression that there's some real opportunities in these things if you're not really careful, especially these double and triple leverage ones. Those are basically set up like options, so that you're almost you have to be absolute perfect timing with an explosive move. Otherwise, you have virtually no chance of hitting these things. So watch it, really, really closely. Also, as far as the longer term indices, we have made all of the 1.618 expansions in the S&P 500 and the IWM, the Dow Jones Industrial Average. We have not done it yet in the New York Stock Exchange Index. That's still about 50 points away, and we are over this full moon, and that's been a pretty good indicator of trend change sometimes. So we'll keep a close eye. And with the Fed here tomorrow, folks, just expect some really wild volatility. We've had no volatility. I mean, this market has just been, going up step by step, very little selling, just continued buying, and it just keeps going up and up and up. And we know that Isaac Newton's laws will be, unless they'll be repealed, and I don't think they'll be repealed. However, Albert Einstein said that he thought that Newton's laws of motion would be, repealed. So we'll see. Well, I don't know if that's going to be the case. Anyway, someone's asked a question about the wheat. Wheat is one of the ones that we look at for, the market for full moons and new moons, and we're making a really nice pattern that I don't have time to post in here, but we are coming up to a downtrend line in wheat up at this $4.20 a bushel level, basis the March wheat. But that's going to be an interesting one to see how it holds up. Okay, we had one other question, and that was about the British pound, and I'll bring this up to let you see what's happening here. I think we're getting ready to have a buying opportunity here, the British pound, pretty soon. As you can see, we've been in this really tight range here for a couple of months, just like we did from July to September, August to December. We're either heading down to that 115 level, or we're going to find some pretty good support at that 122 level in the British pound. That's what I would like to see post Federal Reserve meeting tomorrow. 877-927-6648. Stay tuned for Byron Tucker.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to have my good friend Byron Tucker from New York City. I met Byron when he was running the Goldman Sachs desk back in 1982. BT, are you there?
I'm here.
Listen, I've told the folks that you went to a ETF meeting a week or so ago, and you wanted to share some of the information. So I'm just going to turn over the microphone to you and just give them a preamble of what you looked at and what you learned and some of the things that we talked about. So you've got the microphone, so fire away.
Well, I was invited to an ETF conference at the Bloomberg Center, which was aimed at institutional investors and professional traders. The great and large ETF creators, BlackRock, Goldman, Vanguard, and of course Citadel, who's a repackager of about 37% of all wholesale ETF products, was represented talking about what they were doing and what they saw in the ETF world. It was moderated by a Bloomberg ETF specialist and was quite interesting. And there were some things there I discovered that I wasn't fully aware of before, and I thought general traders might like to know about it. I think the primary overview I would express is that ETFs are not little mutual funds. They're far more complex than that. And although they trade like stocks, they're not really stocks either. So it takes some caution in getting involved in them. And ETNs, exchange-traded notes, are even more complicated because there's no real backing of that note other than the creditworthiness of the institution issuing it. So if that institution has a problem or a credit crisis, the value of any investment you have in one of their notes, since it's unsecured, could be zero. Should I go on, Larry?
Wow, zero is a pretty low number. I had no idea that these ETNs had that type of risk involved with it. So keep going. Yes, this is great.
So, as I said, Citadel does about 37% of the wholesale ETF trade. Most ETF investments are unhedged. We've seen a tremendous inflow, $150 billion, into tech, pharma, and biotech as a result of Trump's election and his statements about what he wanted to see changed. The watchword, I think, for all investors is to be aware of volume, volatility, and beta. Beta being the amount the individual security moves relative to the whole market. So a beta of 1 means that for every percent up in the market, the security's up 1%. There are 1,900, more or less, ETFs, and 12 of them account for 90% of the volume. To give you some perspective, the SPDR S&P 500 ETF has assets of $197 billion and trades 113 million and change a day. The next largest ETF is by iShares, and that has 79 billion in it. So money tends to congregate where there's liquidity and where there's a chance to get in and get out. One of the risks that we all face as ETF traders, and I trade them actively, is what happened August 24th. The market had a huge move for many reasons, and many of the stocks did not open on time, so that the ETF was completely mispriced on the screen relative to the value of the underlying securities in it. If you had a stop loss in there, you were really destroyed. So it's useful to understand how ETFs function in that whoever's a market maker is running essentially an arbitrage book. They're making a market and posting the information for the ETF itself as a security, but they're also having to constantly manage the underlying securities to keep their balance intact. And in market crisis moments, that's really virtually impossible to do. One of the more interesting phenomena that occurred in the recent gold decline a few days ago was an ETF called NUGT. I think you call it Nugget, Larry. It is an ETF of an ETF. I didn't know that until I did some research, which means you're doing second derivative actions. It's also leveraged. So when gold was down 3.5%, this ETF Nugget was down 45% because of the leverage factor. They had to sell over twice the assets that they held to keep it in balance. One thing to be very mindful of with leveraged ETFs is there is an embedded option in all of these. So it's going to trade with option-like characteristics. They are also repriced every day, so that tracking error, which is the relationship of the posted value to the underlying security that's being tracked, let's say oil, for example, can be as much as 30% if the repricing, if the market moves in stair steps slowly, the repricing can create these huge imbalances. And so the feeling at this conference was that only professionals should trade leveraged ETFs because they are really too complicated unless your holding period is going to be less than a week.
Wow. How about the gold and silver ETFs, the GLD and the SLV? Are they a little better as far as beta?
I have some information here. Let me see if I get the beta on that. I have the volume. The GLD gold shares has about 40 billion in it, and it tracks reasonably well. It's not leveraged. One thing to remember, and this is useful for traders in commodity ETFs, including the currency ETFs, are taxed as are futures as opposed to stocks. Stocks are taxed if you hold it less than a year at ordinary income rates, which can be in New York City as high as 50% with state and city taxes. However, commodity ETFs, which would be gold and the currencies and oil and so forth, are taxed as commodities, which is 60% long-term and 40% short-term tax rates. So you can save as much as a third or more in taxes if you trade commodity ETFs. But you need to make sure your accountant understands this.
Okay, there are not many accountants that do that because most of them don't run into people like us very often, that's for sure. We've only got a few seconds here to the break, so if you have a few more extra minutes after the break, you could come on and we could continue a couple other questions that we have from some of the folks, coming in, have asked some questions here that I have for you when we come back from the break. Would you be able to do that?
Sure, I'd be delighted.
Okay, and how's your weather there in New York today? Is it as bad as it looks like across the east?
It's 40 degrees, but Thursday and Friday, the high of the day is going to be in the mid to low 20s, so we're getting a cold front.
Oh, dear. I can remember those days in Chicago when we traded together. I have to tell the folks one of these days a story about we were late and you were driving on the sidewalk to get to the Merc one more. Okay, we'll take a little break and we'll be back with Byron Tucker.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Byron Tucker from New York City talking about ETFs. And the first question we have comes from Texas, Byron. The gentleman would like to know, what is the relationship between the volume in ETFs and the volumes that we have in the stocks? Do you know what that figure happens to be?
Dramatically greater than the underlying volume in the stocks that comprise it. And it's like a future in that regard, Larry. Futures trade dramatically more in the market than the actual quantity of value that exists in soybeans or wheat or even gold, because they're speculative functions and also to some degree hedging. So you're going to see a lot more volume in the ETF, which is not a bad thing because it lets you get in and out. But that's why running a market-making operation there is really quite challenging.
Mm-hmm. Okay, we have another question, and this is from someone from Iowa, and they're asking the question is they had bought this ETF for corn, CORN, and even though the corn market had a big move, his ETF didn't move very much at all. Is this part of this reasoning of how it's calculated each day?
Well, if it's not leveraged, then it doesn't have that daily price setting. But corn I haven't looked at the ETF, but I can only guess that it's not necessarily tied to the price of corn per se. It could be tied to companies that produce and process corn. In other words, there could be Archer Daniels Midland and all these other companies buried in the ETF that have strong corn or ethanol components. But I'd have to do some research on that particular commodity. I haven't tried it.
Who brings out most? I mean, who is the sponsor for most of the ETFs? You mentioned it earlier. They had 38% of the business in ETFs.
That's Citadel. They basically are a market maker in Chicago. They haven't created ETFs yet. Uh-huh. They are ETFs are, and I don't understand the mechanism here because they didn't go into it in the lecture, and I didn't pursue it with the guy. But they do wholesale volume wraps on the ETF, and they do 37% of the volume, and that has to do, I assume, with the market-making function they provide, because they provide market-making across basically all markets. I mean, they're huge. The big producers of ETFs are BlackRock, Vanguard, S&P, and to some degree Goldman Sachs. But Goldman's highly focused in certain specific areas. And then you have Morgan Stanley putting a couple out. But I would say that the BlackRock, Vanguard, and S&P are by and large big creators.
Okay, now we want to we have a question a little off the subject matter today, and that's you were at Goldman Sachs in the early years. I think you worked with John Corzine at one time, but the question that they're asking you, what are about these two? Well, actually, there's been three people from Goldman Sachs been picked in the Trump cabinet. Do you want to explain why that's either a good idea or a bad idea, or do you have an opinion on it?
Well, I don't have a strong opinion. I think Trump came on with such a populist expression that he really scared a lot of people in the more structured establishment. And by bringing in individuals who understand business, which is his orientation, and capital markets, he's trying to calm things down and create a more balanced presentation for both the world and for the U.S. economy. There's been a revolving door between Goldman and the U.S. government for 30 years. And part of that has to do with the knowledge that is gained at Goldman because of its perspective and its perch, but part of it also has to do, I'm sure, with campaign contributions. But these are just guesses on my part, Larry. I think Mnuchin is probably not a bad choice. I have a few questions about Gary Cohn. I think Tillerson would actually be probably a pretty good choice because you don't run a company like Exxon with relationships around the whole world if you don't understand both diplomacy and how to get along with people.
Yeah, I agree with that one, too. I think that could be a very interesting one. Now, the people don't realize that even though Goldman Sachs gets a bad rep, those guys are pretty well educated by their, not just by their education, but by the peers while they're there. Am I correct about that?
Absolutely. You know, what was great about Wall Street, I was in two different Wall Street firms and one corporation, private corporation. If you get into a Wall Street firm, they assume you can do whatever they tell you to do, even if you don't know the first thing about it. And I was thrown on the trading floor with, zip knowledge. And although I'd been in a grain house, a big grain firm, in 3 months you master it or not. But the thing about Wall Street is the willingness to cede both authority and responsibility very quickly to people and let them do, because people that are hired at these firms are capable of succeeding, and they give an opportunity for that, which I never saw to the same degree in corporate America.
Yeah. Go
ahead, Larry.
Go ahead. No,
Sorry.
You finish up. We want to listen to you. Go ahead.
I have a couple of before we sign off, a couple of other overviews on the ETF space, if I may.
Sure.
There's $35 trillion in equities in this country, and there's $1.7 trillion in ETFs. So the capacity for growth there is enormous. How that manifests, of course, is another challenge, another question. These are just general observations. In the top 12 ETFs, within 4 or 5 points, basically cents on the ETF quote, you can trade 25 million. And if you want to trade 100 million, you have to have a 10 to 12 point bid offer spread. That is pretty amazing when you consider what that means to a market and how it gets absorbed. Also, it's always useful to remember, as any kind of investors, 70% of the return of the S&P is dividends.
Yep.
And
people don't
there's a
remember
big push. That. No, they don't at all. There's a big push right now in the government to make ETFs legal for 401ks. And I think that would not only expand the ETF space, I think it would give people some flexibility. The advantage of an ETF over a fund is you can see what's going on every day. The disadvantage is that it is not managed by professionals, and so you're doing the very best you can. Mm-hmm. The low volatility ETFs have an embedded interest rate in them, and so if you have a low vol ETF, you're going to be trading more like a bond. And lastly, there's about $70 trillion in cash on the sidelines in the world, and that's going to go somewhere here once we settle out some of the issues in Europe.
Wow. I didn't realize there was that much cash out there. How much of it is yours? Hey, listen, I want to thank you for joining us today, buddy, and I hope to see you soon out here in Arizona. And have a wonderful holiday. Okay.
Thanks, Blair. Have a good drive.
Okay, you bet. Byron Tucker, formerly of the CME and now New York City. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got a pretty big movement going on here in the NASDAQ 100. It's the one that's leading the market. We're not very far away from 20,000 in the Dow. I believe we're above 19,900, but that's really close. Remember that those numbers are 10,000, 11,000, 12,000. Those are things that they put in the news. I don't know if they mean anything very significant or not. If you look at this NASDAQ chart and making the new highs over the October highs, with this big move we're having today, there's a 1.27 number just a little above where we're trading right now. Whether that'll hold the market or not, I'm not sure, but it'll also be a 1.618 retracement of the last 2 days range. So that level at 49.45 in the NASDAQ will be very interesting to watch that for sure, to see what's going on here. Duffy, I keep in the background CNBC just for special news announcements, and there's no hats this year. The only time we've had hats actually was at 10,000. And if you remember, Ralph Alcampura was the first guy to talk about Dow 10,000 when the Dow was at 7,000. And he worked for a firm. In fact, I know Ralph, and he worked for a firm, and he kept talking about this, and he had everybody bullish during that time. And when it hit 10,000, they gave him a present. And his present was he got a brand new 1962 Corvette convertible. And it was basically brand new. The car only had like 1,000 miles on it. It was worth about $100,000 then. I think it's probably worth $200,000 at that time. Fortunately, Ralph had some kids, and he sold the car after a couple of years to pay their tuition in college. But it was really something. It had, and of course the license plates, of course, were Dow 10,000. So it was a pretty big deal. But he predicted that, back when the Dow was at 7,000, and it did go to. In fact, for several years, they got all kinds of free advertising about this $10,000 or 10,000 Dow thing. That's pretty good. So we'll see. That's it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.